Hello everyone, let's start with the next question. Actually in our last video we have completed question number 35. Now we are going to start question number 37 that will include some journal entries regarding interest on capital. P and Q were partners in a firm sharing profits in 3:1 ratio. Their respective fixed capitals were rupees 10 lakh and 6 lakh. The partnership did fixed capitals. Try to underline this language that fixed capital means at the place of capital accounts we will write current accounts. Okay. The partnership deed provided interest on capital at the rate of 12% per annum. The partnership deed further provided that interest on capital will be allowed fully even if it will result into a loss to the firm. The net profit for the firm, that is 1,50,000. Pass necessary journal entries in the books of the firm allowing interest on capital and division of profit among the partners. Means in this case your profit or interest on capital is charged against profit, because the line goes that even if firm incurs loss to the firm. Means if there is loss to the firm, in that condition also you have to provide interest. So interest is charged against profit. We have to provide only journal entries in this case. So just for understanding, I am first preparing the P&L account so that entries will be easy for us. Yes. How do we show the profit? At first profit is 1,50,000. So we show here my profits for the year. That is 1,50,000. After that we will write here to interest on capital. This question may arise in your mind that interest on capital is given to partners, so it should be written in P&L appropriation account. That is right. But here interest on capital is charged against profit. That's why we are recording it in P&L account. Every charge against profits will be recorded in P&L account. Okay. So interest on capital. Partners' capitals are 10 lakh and 6 lakh. What are the names of partners? P and Q. 10 lakh multiplied by 12 upon 100 and 6 lakh multiplied by 12 upon 100. Means 1,20,000 is the interest of P and 72,000 is the interest of Q. So total interest is 1,92,000. Whether your profits are only 1,50,000. It means firm total loss of 42,000. This loss will be given to partners, means by partners. Current accounts P and Q. This loss will be given in their profit sharing ratio, that is 3:1. So 42,000 multiplied by 3 upon 4. 42,000 multiplied by 1 upon 4. So for first partner it will be 31,500 and for second partner it will be 10,500. This is only a working note of P&L account. Okay. Now just pass journal entries. Journal entries in the books of, what is the name of firm? Name of firm is not given here. So just write down the books of firm. First of all, that is date, particular, and 2 columns for amount. Okay, so first entry what we will pass, that is for interest on capital. Interest on capital is expense for the firm, so it will be debited and partners' current account will be credited. So first entry is pass, interest on capital account debit current account to Q's current account. Okay, amount is 1,20,000 and 72,000. So total interest on capital is 1,92,000. Narration you can write for this being interest on capital given to the partners. As I told you that don't waste your time to write more narration because it will not increase your marks. So don't waste your time for narrations. After this, the second entry, that will close interest on capital's account, that will be from P&L account. P&L account debit to interest on capital account. Because here interest on capital account was debited, so now it will be credited. So write down 1,92,000, 1,92,000. Interest on capital account transferred to P&L account. After this, the third entry we will pass for losses. Actually, you know that when there is loss to the firm, it means it will decrease partners' current accounts. So partners' current account will be debited here for loss. P's current account debit. Q's current account debit to P&L account. So their loss distribution was of rupees 31,500, 10,500 and total 42,000. So we will write gain, loss transferred to partners current account. And these all entries will be passed on closing date. What is the closing date in the question? 31st March 2018. So just write down 2018 31st March. So this was question number 37. This was really a very simple question. Just entries was there, and one more point, that fixed capital method was applied. It means for the place of capital account we will write current accounts. Okay, so that's why just I solved this question for you. And for roughly for working note, you can prepare P&L account because it will be helpful for you to make entries, right? Let's see the next question. Question number 39. What is there in 39th question? In this also, interest on capital is charged against profit. Again the same thing, that interest on capital is treated as charge against profit. So we'll prepare what? Tell me, what we will prepare in this? P&L account or P&L appropriation account? Waiting for your answer. I think easily you can give answer in just 1 second, that we will prepare P&L account. Because whether there is charge against profit, we prepare P&L account, but if there is profit in P&L account, so that will be transferred to P&L appropriation account. So the next question, question number 39. Kavita and Leela are partners with capital 6 lakh and 4 lakh and sharing profits and losses in the ratio of 2:1. Their partnership deed provides that interest on capital shall be provided at the rate of 8% per annum and it is to be treated as a charge against profit. Underline this point, that it is to be treated as charge against profit. Prepare relevant account to allocate the profit in the following contemplative cases. Case 1. If profits for the year is rupees 1,10,000. In case 1, you have profit that is 1,10,000. But interest is charged against profit, so what we will prepare, that is P&L account. We will prepare this P&L account. Okay. Yes, it is charge against profit. So just prepare P&L account. First of all, write down my profits for the year. 1,10,000. Yes, charge against profit means you have to give full interest on capital, so you don't need to calculate separately. So just write down here to interest on capital. Partners are Kavita and Leela. Yes, what is their capital? 6 lakh and 4 lakh, and interest is 8%. 6 lakh multiplied by 8 upon 100, 4 lakh multiplied by 8 upon 100. So for first partner it will be 48,000 and for second partner it will be 32,000. Okay, 48 plus 32, 80,000. 80,000 is the interest on capital. So it means now you have remaining profit. So that remaining profit will be distributed among the partners in their profit sharing ratio. 20,000. Sorry, 30,000. 48 plus 32, that is 80. 80 plus 30, that is 1,10,000. So write here to partners capital account. Sorry, partners capital, not partners capital. Already we have sufficient profit and profit remaining, so we will transfer it to P&L appropriation account. P&L appropriation account transferred. So prepare now P&L appropriation account. Because when there is profit, first we have to transfer it in P&L appropriation, and later on we will distribute it among the partners. Yes, by P&L account, that is 30,000, and now this 30,000 will be distributed among the partners. That is to partners capital account. Kavita and Leela. 30,000 multiplied by, what is the profit sharing ratio? 2:1. Means 2 upon 3. 30,000 multiplied by 1 upon 3. It is 20,000 and 10,000. This is the distribution of profit in first condition. So what was there in this? That your profits are like 10,000 and interest on capital is 90,000. So remaining 30,000 will be transferred to P&L appropriation account, and from here you will distribute it to partners. Okay. Case second. Now in case second, your profits are 35,000 rupees. Means now you have only 35,000 rupees profit, but you have to provide interest on capital fully because it is charge against profits. So profits for the year is 35,000. To interest on capital, that is Kavita and Leela. It will also be provided same 6 lakh 4 lakh multiplied by 8%. 6 lakh multiplied by 8%, that is 48,000. 4 lakh multiplied by 8%, it is 32,000. Means now your interest is more than profits, so it means that is loss to the firm. So 80,000, loss of the firm will be 45,000. This loss will not be transferred to P&L appropriation. Loss will be distributed in the same account So by partners capital account, that is Kavita and Leela. 45,000 multiplied by 2 upon 3, and here 45,000 multiplied by 1 upon 3. So for first partner it will be 30,000 and for second partner it will be 15,000. So this is the second case. Third case, in this loss for the year is 10,000 rupees. Loss for the year is rupees 10,000. But it doesn't matter whether there is loss, whether there are not sufficient profit, doesn't matter, because already it is given in the question that it is charge against profit, means you have to give full interest. So prepare P&L account. I am not writing particular amount. I think now you are intelligent, easily you can also write this. So first of all write down loss for the year, rupees 10,000. Then to interest on capital for both partners, that is Kavita and Leela. For first partner it was 48,000, for second partner it was 32, means 80,000. So total loss of the firm is 90,000 now, and this 90,000 will be transferred to their capital accounts by partners capital account, that is Kavita and Leela. 90,000 multiplied by 2 upon 3, 90,000 multiplied by 1 upon 3, means it is 60,000 and 30,000. Total 90,000 rupees is the loss of the firm. Okay. So what was different in this question? This was also similar as I told you question number 35, right? In 35th question, just we included all the cases, but in this the case was only of charge against profit. I think now you easily understood this point, that what we have to do in the case of interest on capital, or how we treat this point. What was the difference in this? Again I am summarizing that in the case of charge against profit, you have to give full interest to the partners. It doesn't matter what you have, loss, profits or not sufficient profit, it doesn't matter, just you have to give full interest on capital. Okay, but if there is no charge against profit, in that case you have to check that you have loss, you have profit or not sufficient profit. Okay, in that case we should check, right? Now next question is, that is something different, because this concept is clear by every student now. Easily you can also solve the question, like I am skipping some question here, that is your homework. You will solve that questions on the basis of these questions. Next question I am taking, that is question number 41. In this, on 1st April 2018, X, Y and Z started a business in partnership. X contributes 90,000 rupees at first, but withdraws 30,000 at the end of 6 months. Y introduces 75,000 rupees at first, increases it to 90,000 rupees at the end of 4 months, but withdraws rupees 30,000 at the end of 8 months. Z brings in 75,000 rupees at first, but increases it by 60,000 rupees at the end of 7 months. During the year ended 31st March 2019, they made a net profit of rupees 42,000. Show how the partners would divide this amount on the basis of effective capital employed by each partner. What you have to do in this, that you have to show the distribution of profit on the basis of capital employed. What is the meaning of capital employed? That first you will find what is the capitals. So write down here, calculation of capital employed for all three partners. Partners are X, Y and Z. Yes, check for first partner that X contributes 90,000 rupees at first. First of all, X is contributing, that is 90,000 rupees, but withdraws 30,000 rupees. Means after this he is withdrawing 30, means now his capital is 60,000. At the end of 6 months, means till 6 months his capital was 90,000, and for the next 6 months his capital is 60,000 rupees, right? So total capital will be 5,40,000 according to first condition and 3,60,000 according to second condition. So total capital will be 9 lakh rupees for X. Okay. Yes, it was for X partner. Now just find it for partner Y. Y introduces 75,000 rupees at first. First of all, he is introducing 75,000 at first and increases it to 90,000 rupees. ₹75,000 it was at first. After that, he is increasing and making it to 90,000 rupees at the end of 4 months. Means till 4 months, his capital was 75,000 rupees. After that, he increases it to 90,000, but withdraws 30,000 rupees. It means now it is 60,000 rupees. At the end of 8 months, out of 8 months, 4 months was already completed here. So now for 4 months, his capital is 90,000, and now find the remaining time out of 12 months, that is 4 months. So for remaining 4 months, his capital is 60,000. Again, just try to understand that 75,000 his capital was for 4 months. After 4 months, he introduces 15,000 more. It means now his capital is 90,000 rupees till 4 months, till next 4 months. Okay, and after 8 months, he withdrew 30,000 rupees from the capital. So now his capital is 60,000 rupees for the last 4 months. So calculate this. 3 lakh rupees, 3,60,000 and 2,40,000. So 9 lakh rupees is the total capital of Y, right? For Z brings in 75,000 at first. 75,000 is the capital of Z at first, but increases it by 60,000. This is the main difference point, that he is increasing by 60,000. It means total capital now is 1,35,000. 2 and Y, this is the differential point. 75,000 was the first capital. Later he increases it by 60. Is 75 plus 60, that is 1,35,000. At the end of 7 months, means till 7 months his capital was 75, and for next 5 months his capital is 1,35,000. So now calculate this. 5,25,000 and 6,75,000. So total capital is 12. Right? Now you have to find the ratio of all these three capitals. Means 9 lakh is to 9 lakh is to 12 lakh. So the ratio is 3, 3, 4. This is the ratio. This is the ratio in which you will distribute the profits. So profits are 42,000. So just prepare P&L appropriation account for distributing the profits. Particular amount. First of all, write down by profits for the year, that is 42,000. Then we have to distribute this profit among the partners. So write down to partners capital account. Partners are X, Y and Z. Distribution is 3, 3, 4. means 42,000 multiplied by 3 upon 10, again 3 upon 10 and 4 upon 10. Okay, so it will be 12,600, 12,600 and 16,800. So total will be 42,000, 42,000. This was your question number 41. That was different question because in this we find here that is capital employed. Okay, it is very simple. I think now easily you can also calculate that how to find capital employed. That is based on months. Therefore, how many months his capital goes. After that, how many increases or how many decreases like this. Okay, so this is capital employed. Ratio was 3:3:4. In this ratio, we distributed the profits. Okay, in next video we will discuss about the next concept. That's all for today. Thank you so much.